with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. The disclaimer, but also all other informations like you maybe like to see, like key information documents, the kits. Also, the information about retail clients and professional clients are to find on our web pages. Since August 2018, the new ESMA regulation is in force. Retail clients will get a maximum leverage for Forex majors up to 30. Professional clients can apply for professional client status and get a higher leverage if they like to do so. All details, check them out on admiralmarkets.com. A picture shows more than 1,000 words. If you trade like a retail client before the ESMA regulation, before August 2018, you just need for a DAX 30 contract round about 24 euro. For euro dollar, same, 200 euro. And now the new margin requirements as retail client you see displayed as two pictures. Like said, if you're a professional trader, you can apply for the professional client status. The retail client get an unlimited protection against negative balances. The professional client gets protection up to 50,000 British pounds, what is round about 70,000 euro. Check all that out on admiralmarkets.com. This is me. My name is Jens. My English made in Germany, so we are a big international broker, over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, like today, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And on Friday, it's Dirk's Day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, many benefits only available with us. For example, DAX 30 or also euro dollar, typical spread to the main trading hours of just 0.8 points or pips without any additional commission. Also here, all details on admiralmarkets.com. Same like our regulatory background and how to contact us, call us, send us email, or visit our YouTube channel. Couple of hours later, all our webinars usually available in our YouTube channel as a recorded video. Enough from my side. Now it's time for Jay. Good morning, good day. What's your view to the markets today?
Die Stummschaltung ist aufgehoben.
Good morning, Jens. Good morning, traders. Good morning, team. Glad to be back. I hope you're all doing really well. Let me see. Which screen are we showing? That's probably not the right screen. We probably want to show this screen. Let's see if it works. Yep. Okay, here we go. Here we go. Thank you, Alex. Yep, Alex knows it was my birthday weekend, and it was fantastic. It was excellent. And I'm going to get back to all of you who wished me a great birthday, but let's get to work first. Headlines this morning. We did have a slight risk on sentiment during the Asia session. Why? Because late Friday afternoon, we found out news over the ticker that US and China will start working on a roadmap to reach their trade war in terms of a resolution by November of this year. I'll go into details in a little bit. Parallel to that, we continue to get positive headlines out of the US-Mexico NAFTA negotiations, where the Minister of Mexico actually said that by the mid of this week, we may see a deal. So hopefully that's going to materialize. Asian equities on the back of that slightly positive. We did see equities out over there in down under Australia at 0.10 basis points. The Nikkei, due to some yen strength, saw a little bit of a loss with 20 basis points in the red. Hang Seng made 1%, and Shanghai, there's a typo in there, I apologize, slightly up by 10 basis points. One of the charts you may want to keep an eye on is dollar CNY. It's back below 6.85. And while I was preparing the morning meeting, my buddies over at Societe Generale, my last shop, great macro research, by the way, really, really good macro research, came out and they said that, oh, this is dollar Turkey heading towards 8. We'll talk about dollar Turkey as well. So dollar CNY, I'll have a thing to say about that as well. So keep that chart in the back of your mind while we talk about it in a sec. We have a couple of trades from last week that we'd like to take a look at. On the 13th of August, my suggestion was that I'm looking to short the Aussie versus the yen. I said the risk to the trade is that it looks like we're building out an accumulation phase and an institutional accumulation in the Aussie. The CFTC Commitment of Traders report has warned us and continues to warn us that we are on our way to a long there. If the dollar CNY / the US-China trade dispute were to come to a resolution sometime during the next weeks or months, you will see the Aussie rally on the back of it. Be it as it may, the short that we entered at the market did not go all the way to its target, because we did see a, well, my traders know what this is. I don't want to go into detail into that, but there's just here and here we do see a long, and here we do see a long. So this short has been triggered. If you were to blindly follow suggestions, which I do know you're all not doing, look at this. There's a lot of POCs accumulating right here in the middle. So there's a long accumulation phase. I do know that Barclays, I think it was this morning, came out with a suggestion for a short trade on the Aussie yen. Was it Barclays? Let me take a quick look. If you have the second, Morgan Stanley, nope. Where's the trade? Someone was suggesting short Aussie versus US dollar as the trade of the week or month. I can't find it right now. I'd be careful with that, is all I'm trying to say. Nevertheless, I stick to my trades. So meaning, I personally I would, if you have the opportunity, if you are short, I would be careful with the Aussie dollar yen short at the moment. Then we suggested, or I suggested, long pound versus Aussie. At the market at the time, it just looked too good to be true, and it was. It never even touched. It never even went against us, and it went straight to target. And it was pretty clear cut at the moment. So, lesson once again is setting up trades on a Monday when institutionals actually position themselves for the rest of the week, depending on what economic numbers and speakers are expected, is always difficult. I said this many times during the Monday morning meeting here. Nevertheless, I like the Monday morning spot because it actually forces me to do the work for you guys to look at what's coming for the whole week. But it is difficult to come up with a trade suggestion because, again, on Mondays, the big boys position themselves for what we call a campaign. We look at strength versus weakness. We see the Swissy saw some strength overnight, and the New Zealand dollar some weakness, as well as the euro. Pretty much a mixed picture. I always keep an eye on the US dollar right now, and we see that last 5 trading days it was a range bound. That's the blue line here, and over the last 30 days it was slightly up. We did see an almost year-to-date high in the Dixie, the DXY, the US dollar index versus the G8, or within the G8. Keep an eye on the blue line for now. I expect on the back of if the trade war were ever to be resolved between US and China, I would expect a little bit of weakness to come into the dollar, because we did see quite a few flows into the dollar based on flight to quality. All right, numbers for this week. On Tuesday, we have the monetary policy meeting from the last meeting of the RBA, and we have Governor Lowe speaking. So we do want to keep an eye on that. On Tuesday, Wednesday night for us, we have the GDT price index out of New Zealand and the retail sales expected to come in a little bit better. And core retail sales also expected to come in a little bit better. Commitment of Traders report tells us that we are on the way to a long signal in the New Zealand dollar. It got hammered. The RBNZ was dovish last time around. So it's not a one-way street. There will be an attempt by dealers to get rid of some of their positioning. So be careful to continue shorting New Zealand, especially during the week where we are expected to see a little bit better numbers. It's been a while since we saw some better numbers out of New Zealand. Canadian dollar retail sales, I do keep an eye on that because on Friday we had CPI numbers that came in higher than expected. We did see on the back of it immediate Canadian dollar strength, and I expect this to continue this a little bit longer. So I'm very eager to be mindful on Wednesday how the numbers are to come in. Dollar, we have on Wednesday existing home sales. I've only had 2 coffees so far, so not working very well. And FOMC meeting minutes. Not that much expected out of the minutes because it was a pretty clear picture. Not that market moving in terms of expectations. So on Thursday, we have flash manufacturing PMI for the Eurozone, 55.1, last time 55.1, and then on services 54.4 versus 54.2, so slightly better on the services side. We have the policy meeting account similar to the Fed. Draghi was very, very clear last time, so we don't expect that much new information. We never really do, but sometimes it's important, not sometimes, our analysts always look into the minutes to dig through information, slight change of wording. Maybe more policy members leaned towards A versus B, so that's why we always go through the meeting minutes. But this time, again, similar to the Fed, was pretty clear. Jackson Hole starts Thursday and Saturday. If you don't know what it is, it's Kansas City Fed, one of the regional Feds, once a year, a central bank symposium where central bankers from across the globe, all the major central banks send someone, and there's always a topic. I'll tell you what the topic is this time around in a minute. But also, and this calendar doesn't show it, so I added it manually. That day, $16 billion on additional tariffs go into effect versus or against Chinese goods. So we need to keep that in mind. Trade balance for New Zealand, and this is what we said last slide. New Zealand economic numbers do come in weaker recently, and the RBNZ turned a little bit dovish. So last time they moved their expected first rate move from first quarter 2019 to fourth quarter 2019, and the New Zealand dollar sold off right away on the back of it, and we need to keep an eye on the economic developments out of New Zealand. And then last but not least, on Friday, we have core durable goods orders. Again, a stronger number expected out of the US. On the core side, US economy is doing really well. We were a late cycle in terms of economic cycle. The tax deal by Trump administration causes us to move further ahead now, or back, let's rather say further back in terms of where we are in the cycle, and the U.S. economy is humming along really nicely for now. That's why we do see central bank monetary policy divergence. Okay, and then we have Fed Powell speaking on Friday at the symposium, and we'll see what he has to say. That schedule comes out Thursday evening. Trade war. The positive news, the risk on sentiment on Friday, by that headline that I mentioned a minute ago, then you go into the headline and you start wondering, so who's meeting whom? So the Chinese Vice Commerce Minister, Wang whatever, is meeting U.S. Undersecretary for International Affairs at the U.S. Treasury, David Malpass. Underwhelming, to say the least. Hey, but at least they start talking again, but we are very far away off from any conclusion if undersecretaries meet for the first time after that debacle in May. What happened in May? In May, China was under the impression that they had a deal, and that was to avert tariffs, and then the US, typical Trump style, backed away last minute and imposed tariffs. Ever since then, we are in the middle of this trade war. The assumption is that the US wants to pressure China into getting their currency back to pre-dispute levels. And Commerzbank was kind enough to actually give us the calculations and that research piece. And they're expecting the Trump administration wanting the renminbi to go back to 6.3, 6.4. So put that on your chart in terms of a target range. Expect risk on if that happens. Expect the Aussie dollar to rally if that happens. Okay? Please put it on your chart. Thank you. August 20th, what happened? What is about to happen today? U.S. hearings start in terms of imposing an additional $200 billion tariffs on Chinese goods. So that starts today back home in the States. China already promised retaliation in terms of tariffs on $60 billion worth U.S. imports starting in early September. So the war is in full effect. What happens in 3 days? That's when, I said it on the last slide, 16 yards of an additional U.S. tariffs hit Chinese goods, and that will take effect. Nightmare. The CEO of Maersk, they have 20% of international global container freight shipping on the high seas. That CEO, that was a research piece. No, it was a news piece run on Bloomberg a couple of days ago. The CEO of Maersk actually stated that the trade war will hurt the US more so than the rest of the world. That is to be seen, but I thought it was interesting because this CEO, being responsible for shipping goods across the globe, 20% of all goods shipped is Maersk, has a pretty detailed insight in what's going on in terms of global trade. And in last quarter, their shipping rates rose. I think it was 4%, if I recall correctly. But now they're expecting it to go sideways for a little bit. So we do see a real impact on global trade due to the tariffs. Very, very important to have an overall picture of what's going on. Even when we trade currencies, we do want to know, especially we want to know what's going on globally in terms of a macro picture. All right, let's dig into Turkey. 7.2 on the chart, that's an additional chart that I suggest you start opening up if you don't already have so. Rejected, and we closed towards the 6th level on Friday. Why? We had Germany and France talking to Turkey, and we had Qatar putting in a 15-yard swap line agreement with Turkey. So that was some positive sentiment. But Societe Generale this morning came out with a research piece stating they see that FX rate go towards 8. All right. So that would imply risk off and a contagion possibility to more of emerging markets. By the way, also a good research article on Venezuela on Friday and over the weekend. They pegged their currency to their cryptocurrency, the Medrow, I think it's called, and they devalued their currency by 95%. Horrific. They have 1,000,000% inflation over there. Horrific. So much for socialism. It's crap. Italy and Spain, they carry a very large exposure to Turkey. I talked about this several times, especially the Spanish bank BBVA. That was a very good short. Spain's exposure to Turkey via their banking sector amounts to 6% of Spain's GDP. So they have a very high interest not to have a contagion going on there. Turkish stock exchange is closed due to a holiday, so please expect higher volatility. Market focuses on Turkish inflation. Why? Your exchange rate, your currency just went into the shitter. That means you are importing inflation. So reforms are needed, and action by the supposed independent central bank is needed to actually help the Turkish lira. But, and now it's going to get a little bit complicated, but you guys have Google, so what you don't understand in the next 2 sentences, I suggest you start Googling it. The offshore currency swap market liquidity was drained. Why? The effect was, I'll come to the why in a second, the effect was that international investors are now unable to hedge their holdings of local bonds and local stock. That is a huge problem. What did they do? The BDDK, that's basically the banking authority over there, limited local lenders in terms of their swap and swap-like transactions to just 25% of their own shareholder equity, which is basically nothing. I said this last week. I alluded to this. And what happened is that the price of local bonds, i.e. bonds denominated in Turkish lira, and stock dropped significantly. Why? If I, as a foreign investor, cannot hedge my exposure any longer in Turkish equity or Turkish bonds, then I need to sell them. And due to the limitation of local banks to actually on a forward basis lend me Turkish lira versus my euros, or if you're in the States versus your dollars, or if you're in the UK as an international large investor versus your pounds, then I am unable to buy local debt because I cannot carry the lira, the exchange risk, okay? So by draining that liquidity out of the local swap market, I'm also forcing international investors to bail on my investments. And that is horrific for Turkey. So SocGen stating that this is going to aid is right on the money. All right. I don't want to long the Turkish lira. I want to short it. Very, 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 very important point. International large investors cannot hedge their lira exposure any longer due to this new rule implemented by the BDDK. So it's helping the lira on the chart, but it's hurting the bond market and the equity market because foreign investors can't hedge. Does that make sense? On the back of it, S&P downgraded Turkey one notch from BB- to B+ with a stable outlook. That was surprising. And Moody's cut Turkey from Baa2 to Baa3 with outlook negative. That's more in line in my personal opinion. Last but not least, Jackson Hole real quick. The theme is changing market structure and implications for monetary policy. So it's highly academic. That's why we don't expect that much news to come out that is market moving. It's very academic this time around. Powell speaks on Friday, Polo speaks on Saturday, and the schedule comes out Thursday evening, so we'll have a look. Markets currently price in a 70% probability for 2 more hikes this year, and that is the money markets. Sorry for that, I messed that up, doesn't matter. Positioning, real quick, commitment of traders. Aussie on its way to a long signal, not confirmed yet, but looks like an institutional accumulation, but it's very, very vulnerable to headline risk. Any negative headline risk out of US-China trade war, Aussie dollar will sell off again. Swissy, long bias, New Zealand dollar on its way to a long signal, not quite there yet. Volatility, euro coming off tiny little bit, pound coming off tiny little bit, yen in line, slightly increased, and the VIX coming off tiny little bit. US equities are poised to go towards new all-time highs. Got to look at the hedges there, though. Got to look at the skew for the more advanced traders amongst you if you trade US equities to see what the hedges are doing. Option pricing. Bullish for Monday morning was euro dollar, Aussie dollar, euro Swissy. Bearish was dollar yen. Option flows, bullish Monday, Aussie dollar, pound, yen, Swissy, and gold. That's more like a risk off scenario in terms of the flows. But recall, these two indications will start becoming more relevant and better from Tuesday on, because from a Friday night, it's very, very, very often normal that we see hedges being put on over the weekend. We see treasuries rising. We see flows into the yen, into the Swissy, sometimes even into gold, depending on what the dollar is doing, due to it being a weekend, right? So institutional money is parking money in risk off or flight to quality havens, so to speak. And these hedges are being unwound on a Monday then to go back into risk assets if the sentiment is according. Bearish on Monday, Canadian dollar and euro. Well, again, you got to look at how many Canadian dollars were hedged, because if everything is hedged to the downside, it's actually a bullish signal. Now we come to the potential trade this week. I was looking at shorting euro versus longing Canada. Why? Just before our meeting this morning, I saw PPI coming in at 0.2 versus 0.4 expected, and it was 0.3 last time. So that is taking off some pressure and also supports outflows of the euro that we saw in the London session so far. Canadian dollar, as I said, Friday's CPI numbers came in much stronger than expected, 3% versus 2.5, and on the core, 1.6 versus 1.3. Canadian dollar rallied on the back of it, and I expect this to potentially continue further on. The risk to my trade is higher Euro flash services and manufacturing PMI numbers this week, and or Canadian retail sales numbers disappointing significantly. For example, have a quick look at the chart. So I got liquidity above and below. I'm in the middle of the middle in the middle, but I do see market makers withdrawing liquidity right here into a top edge, and I do see market makers withdrawing liquidity right here. I used to do the same thing as a market maker. We withdraw liquidity when we are on the wrong side. So you just leave it. You're off. You're done. Now we're heading towards the liquidity of Friday, and I expect us to drop further. That's it. Wow, I hope I'm in time this time. Thanks all for showing up on a Monday morning. Oops, there we go, 11:27. I wish you a solid week. Hopefully you can make some pips. Remember, it's these economic numbers, and when something comes different from how it is expected, that actually moves the market. And also remember that market makers utilize what I term bullshit news, irrelevant, long-term, non-relevant news to get into position either for or against you. So don't get caught by us. It's our job to always put you on the wrong side of a trade so that we are on the right side. And so follow the institutional money is what I'm trying to say. Okay, I better get my third coffee in. Have a good week, guys, and I'll speak to you next week. Hopefully you'll have time to show up, and I wish you a very successful week. Jens, thanks for the opportunity to speak, and all the best to my traders as well. Bye-bye.
The bell is ringing already, didn't you hear it? Thanks, tomorrow is another day. We have 5 days a week, 5 different traders, so hope to see you all again. And if you'd like to see a slide again or the video again, a couple of hours later, it will be available on our YouTube channel, youtube.com/AtmeMarketsFX, and you can see it as often like you want. Thanks for now, and I hope I see you tomorrow again. That's the right word. Thanks again. Bye-bye.